So I think, that entrepreneurial spirit, we can see that play out in the business that you've built today. How about your first job out of uni? It seems to me when I look back at your CV or your LinkedIn profile, it looks like you came from relatively a humble first job out of uni and you quickly rose through the ranks. So perhaps you can shed some light on that and maybe the first few years out of uni.
Yeah, as I said, university, stepping stone. My father was an engineer, and I suspect doing a commerce degree was probably a little bit disappointing from that perspective. But that's what I wanted to do. It was in the middle of the recession we had to have, and there weren't many, in terms of trying to crack, get into investment analysis, which is what I wanted to do, stock analysis. I had to either go to my first choice was the buy side. So Australian sort of funds management was still starting, and there wasn't as many choices as you have today. It was still dominated by big brands, big institutions. Or you could go to the sell side, but it was the middle of the recession, so sell side was certainly not hiring anyone other than maybe the absolute top grads. So it's a pretty competitive environment. So my break was to start with a non-profit organisation as a finance, pretty simple job, just basically paying the bills.
The admin side of things.
Admin, and that was it was actually Dusseldorp Skills Forum, which Dick Dusseldorp, who founded Lend-Lease.
Right.
They share when he retired. They set up basically a charitable foundation to research vocational training, sponsor different vocational training. One of the related entities ran the trade Olympics. There's a global federation that runs these trade Olympics, and so I met some interesting high achievers who, non-white collar, blue collar high achievers as a part of that job. But very soon was running the finance side of that. So it was doing board reports and presenting to the board on, and there was because there was money, but Lend-Lease actually set aside some shares and to fund that foundation, and so we had to. That was an opportunity to get exposure to some relatively senior, finance, let's call it financial advisors, and get insights on how they think about risk, because we had to run a balanced portfolio of equities and bonds and cash. I was thinking, how does that all work? But from that, I managed to get a job a couple of years, 3 years in, with Tyndale Australia, who were advertising, a small insurance company, that kind of looking for an analyst, trainee analysts, and they didn't really they wanted people from different backgrounds. It was the job itself wasn't even advertised in the Financial Review. It was in the general classifieds of the Herald.
Okay.
Yeah. So they hired two trainees. I was one of them, and that program, that sort of induction, was led by Peter Pedley, who was on sort of he'd been like a secondment from Tyndale Investments.
Okay, yep.
To Tyndale to build up the investment process, and it's a very thorough process, quite rigorous. Peter was a very strong personality. Didn't suffer fools, didn't like wasting time, so he'd give you something to think about on Monday morning, and then you had the rest of the week to think about it, and the following Monday, you'd be given a chance to present, and you either got progressed to the next stage, or you had to go back and spend another week thinking about it. So it's very much teach yourself, but within a framework of learning.
Yep.
And it was awesome.
Yeah, I can imagine. It's kind of like just supercharged your learning, because you've just thrown in the deep end and said, here you go, this is your project.
And there was 6 months of that, from, why are earnings yields, what's a dividend yield, what's an earnings yield, why do ROEs matter, what valuation multiples are useful? Should we look at enterprise value, or how do we think about the relationship between equity valuations and enterprise valuations? How do we think about the relationship return on capital? And it's all this, a lot of technical stuff, admittedly, but it's the foundation.
And it sounded like what you needed at that point of your career, anyhow.
Yeah, and Peter was a pretty savvy investor, so it was very advantageous to be exposed to that type of experience early on. And after 6 months, you're thrown in the deep end as part of the Tyndale investment process, and you're picking stocks. So it couldn't have been a better way of getting started.
So you started on Australian equities, equities, is that right?
Yeah.
Okay.
3 years at Tyndale. High conviction, concentrated portfolio, sort of quite different at the time. Pretty standard now, but at that point in time, like having a 12 stock large cap Australian portfolio was fairly
fairly out there.
Yeah, fairly out there. Yeah.
Okay.